what kind of valuation parameter do you think you would, look at that to identify, okay, this is still part of the trend and there's still some room to grow?
Megatrends investing is like truly behaving like an investor.
Every megatrend goes through two cycles. One is the hype cycle and second is the earnings cycle.
Hello folks, I'm your host Anupam Gupta and this is Bajaj Finserv Mutual Fund presents Megatrends Investing. We're diving deep into the fascinating world of megatrends. I'm thrilled to introduce our distinguished guests, Nimesh Chandan, CIO at Bajaj Finserv Mutual Fund, and Sorbh Gupta, Head of Equities. Nimesh and Sorbh, thank you so much for doing this for our audience.
Pleasure being here.
Thank you for inviting.
Sorbh, my first question is to you. We learned a lot about megatrends as a concept, but how do you make this into a process for portfolio construction?
Thank you, Anupam, for that question. So one has to understand what megatrend is. That's the top-down part of it, and then try to identify which companies benefit from it the most, which managements have the capability to benefit from it most. Let me give you an example of a company which is an NBFC and has seen a 40% CAGR compounding of its profitability and higher compounding in its share prices. Essentially, it was a good management at a good place which benefited the company. Had that same management started to run a fertilizer company, which the industry was compounding by 3%, there was no chance that they would have compounded the profitability by 40%. So essentially a beautiful combination of top-down and bottom-up, where there is an industry tailwind which helps you grow fast, and then you identify the business and the management who are well positioned to benefit from it.
It looks like the ideal combination of top-down and bottom-up. What is the process that you use to arrive at the final universe of stocks to invest in?
One should identify what's the universe of market cap that one wants to use. Essentially, a liquid portfolio definitely helps. So it has to have a flexi cap approach, because also very smaller companies can also benefit from megatrends. So it has to be a universal market cap that one wants to choose. From that, one should start with eliminating companies who are actually not beneficiaries of megatrends, because definitely when you see at megatrends, there will be some lot of trends which will be losing out. You need to eliminate them. Once you eliminate them, then you come out with list of companies which are benefiting from certain megatrends, and then you start selecting companies where you have management comfort, where the management is smart enough to take benefit, where the balance sheet is good, and then you wait for your valuations, pick the stock, and construct a very robust portfolio which benefit from megatrends.
I wanted to get your perspective in on this, right? Because a lot of time when we talk about megatrends, we just assume that every company will benefit. But what a very important point about companies that will get disrupted,
Yes.
right? That also happens.
Absolutely. So when we identify megatrends first in, say, the 6 sources of megatrends, which we put as T, R, E, and D, S. So we identify megatrends, try to overlay these megatrends on all the sectors. And then we try to see which are the companies in the sector which are on the right side of the megatrends and which are on the wrong side. Obviously, for investment sake, you want to pick up those which are on the right side of the trend and then use that universe to further analyze in terms of whether they have the capability or ability to use that megatrend for growth. And here, as Saurabh mentioned, there are many stages we look at. One, it should be a net beneficiary of the megatrend. There should not be any other trend which actually nullifies the benefit to this company. Then we look at whether you can monetize this trend. The company should be able to make some profit from growth in that megatrend. Third, as Saurabh mentioned, we look at the balance sheet, where we do a detailed financial analysis on what kind of capex will be required for growth, what capex or what cash flows they can generate out of the business. And then comes the stage of valuation, where you want to see whether the trend that you are investing in is already discounted by the market, they are already expecting it, and that's why it's already in the valuation, or there is room for upside left for you to invest.
Yeah. So can you just come in here and talk about the valuation aspect that Nimesh just spoke about? Because I think that's an important parameter, right? To know whether this is a discovered trend, not discovered trend. Because after all, if you've done all the analysis on megatrend, but if you've missed the right time to enter into the stock at that time, so you just help our audience understand, what is it about valuation that gives you a hint, timing, any other factors?
Sure. Your valuations, at what price we get the stock, becomes extremely important. Look, every megatrend goes through 2 cycles. One is the hype cycle and second is the earnings cycle. Most of the people attempt to invest in a megatrend during the hype cycle, and there is a risk that you get stuck into a bubble at very high prices. Essentially, one should wait for the earning cycle to begin, because that's the long lasting cycle of a mega trend where you get the benefit of earning compounding. And once the hype cycle goes out, stocks are available at valuation that you want them to be at. The valuation comfort emerges and the earnings starts to pick up. So the focus while investing in megatrends should not be on hype, but when the earnings starts to flow in, the cash flow starts to generate, and the balance sheet is strong, as Nimesh highlighted. So it's the second part, which is the longer part, and that's the time to look into megatrends and megatrends investing.
I'm going to come back on the numbers part for a bit, but Nimesh, hype, your area, behavioral investing. How do you, as a fund manager, as a CIO, do not yield to temptation? He spoke of a great point about separating the hype from the reality.
So investors typically and people in general have difficulty in thinking non-linear. What most people do is take a recency bias and extrapolate it into the future. So if something is growing at a clip compounding of say 40%, they project 40% for 10 years, 20 years. Something that is growing at say 5%, they extrapolate that for the next 20 years. So people have difficulty thinking non-linear. And life is not linear. It unfolds in cycles. What we try to do is by holding mega trends as our compass. If you are a mega trends investor, you will be able to identify that this is just a small down cycle in an overall uptrend. And you can actually price or value the company correctly using that data point. So it is possible that companies which are in megatrends also may have a slow year or a down cycle sometimes. And that needs to be captured into estimates and valuation. Megatrends helps growth estimates be a little more clearer than just pure extrapolation.
So I have to ask, like I said, I wanted to come back to you on this point of valuations. See, we live in an era where the earnings are not there, non-existent, at least for a certain set of stocks or whatever it is. Possibly some who are in the disrupted or disruptor phase because of technology or because of whatever reason. What kind of valuation parameter do you think you would, look at that to identify, okay, this is still part of the trend and there's still some room to grow, right? Because honestly, I belong to some old zamana of DCF and all these fancy concepts, which I don't think even work today. But what do you think?
No, essentially, it's a very important point. But megatrend investing is essentially a more polished form of growth investing. So you need to get your growth assumptions right in that case. So when we look at the companies or stocks which are benefiting from megatrends, the first layer is what is megatrend bringing you in terms of growth, and what additional level of growth that the businesses can have because of greater management or market share gains. So add to that, you get a good assumption on growth, and because there is a megatrend involved, your chances of going wrong on growth is a slight less. So that helps. So there are quite a few things that we do. We also look at reverse DCF. What is the stock factoring in right now in terms of what is the future growth? Often at times, optically, the stock might look expensive. But if you have really looked at the mega trends and how it unfolds and how companies can benefit of it, companies are definitely not expensive, though optically the stock might have moved very fast because the cash flows are yet to come. There is a possibility that there is a back-ended approach to cash flows. There is a possibility there is a higher terminal growth in those assumptions. But then that you have to factor in. And reverse DCF is something that really helps in that case.
What are the factors are there that help you choose a sector or a stock?
So clearly, one is the trends that we talked about. I think technology, the 6 mega trends that we have identified, which is technology, regulatory, economic, nature, demographic and social. All these 6 aspects, companies should benefit from these. Then you look at companies, as Nimesh highlighted, the company's ability to benefit from it, both in terms of the financials and the management's ability to benefit from it. That's the second part. The third part is actually what's happening on the ground, and are these mega trends sustainable? So there has to be a regular check on whether that mega trend is working or there is new disruption that is coming through. Because in this fast moving world, there is a possibility that you invest in something assuming that this megatrend will play on for longer periods of time, but there is a disruption coming through. For example, AI is one of the biggest examples here. Now, the best beneficiary of AI, besides other things, is power. But recently, Chinese AI that was launched about 6 months ago, it consumed very less power compared to what the AIs of US launches were. So when we realized that, there was a sudden fall in a lot of power stocks because of that, because the assumption suddenly changed that it is not a megatrend anymore.
No.
After few days, people realized that there are a lot of assumptions in these Chinese AIs that will not necessarily downgrade the power requirement in 5, 10, 15 years for data centers who use AI. So essentially that megatrend was back. But these things will continue to happen whenever we look at megatrends. So these type of regular checks is very, very important when we are in doing a megatrend investing.
Very interesting. There will be losers as well. How do you avoid them? And here, I like to think of the past, like the shift from horse carriages to automobiles, the shift from physical cameras to digital cameras. We know that these trends took a long while to play out. People couldn't really know that this is going to happen. And by the time it happened, the companies that were operating in the places that got disrupted, it was too late for them. How do you guys figure that out?
So it's part of understanding the megatrends. It is part of looking at the whole industry, how it is working, and which are the companies who are moving fast enough and investing fast enough on those megatrends. Definitely, what happens sometimes is that companies, as Nimesh also highlighted, there will be two parts of every company which is already doing business. One part benefits from megatrends, and maybe a larger part there is a possibility that actually is getting destroyed because of megatrends, and that will happen in different sectors, including automobiles, including many other sectors, power, renewable, non-renewable. So the importance of company investing in R&D, the importance of company to disrupt itself becomes very, very important. So some of the auto companies or two-wheeler companies that we look at, it is very important that they are ready to disrupt their current ICE business for the battery operated two-wheeler businesses or EV businesses. So the ability to disrupt themselves, ability to do a lot of R&D, and how the management thinks about the future when we interact with them. All those things become very, very important. That's the part where the companies are working. Definitely, there will be certain sectors which are a clearly no, because they are clearly not benefiting from megatrends. So, for example, sectors like pesticide, where everybody is looking at eating more organic, eating more healthier.
Oh.
Clearly, pesticides, especially inorganic pesticides, is a sector which is clearly anti-megatrend, just to give you an example. Similarly, inorganic fertilizers is a sector which is clearly anti-megatrend. So all those things we identify. First, we eliminate the sectors. And within the sectors of megatrends which are benefiting, companies who are positive enough on megatrends, investing enough on megatrends, and ability to disrupt themselves is something that we look out for.
Nimesh, again, going back to your behavioral work, what are the chances of a false positive or a false negative coming out from this entire process? I mean, you guys have been doing this for quite some time. What's been your experience so far? Any, things that you expected but it turned out to be either too premature or it was actually not an indicator at all?
Depending on which megatrend we identified and invested, there could be some vulnerability that something may change on its way. The assumptions that we go with may change, and we have to be flexible. And that's why we have a megatrends team that keeps updating these trends, and we publish it also. I would say some areas, for example, regulatory changes. In the recent past, what we have seen is there can be rapid changes on that side. If there is a change in government in, say, US, and then you see all kinds of duty changes that come in. So you have to adjust to those. Those may change. Technology, while we try to catch or we look at technology trends at their inception or very early, but it is possible that a new technology development can make the previous one or disrupt the previous one or make it less viable. So we look at those. Typically, when we see consumer behavior changes within social, we look at environmental changes within nature, demographic changes, economic changes. Those are more longer term and may have a more smoother ride compared to, say, technology or regulation. So you have to be a little more agile in looking at those. We also look at combination of trends, which helps us, say, reinforce a particular trend if it is fueled by 2 or 3 different areas of megatrends.
Very interesting. Do you guys have a dashboard here? I mean, Nimesh spoke a lot about agility, flexibility. So you would be having some kind of a dashboard or some kind of a tracker that tracks, I don't know, macro indicators, quarterly results, management commentary, news? Is that all part of it? I'm just saying that, maybe some of our audiences out there wants to track this themselves and think of a mega trend. What would you tell them?
Yes, actually all of it. And very important to look what's happening across the world. It is not inward looking, has to be outward looking, and a lot of megatrends definitely happen or start outside India. So it's very important to track companies outside India. That's what our megatrend team does very regularly. What are their commentaries? What are the shifts that they are seeing? Because after some time, those shifts will be seen in India as well. So clearly the larger economies, more developed economies, what is happening over there, that's a very important data point to look at. What's happening, how quickly it is happening, what are the commentaries coming from industry leaders over there, tech especially. All those things come from there. And secondly, also something to track back home is this, for example, one of the mega trends that we have identified is the social part. How's the social behavior or demographic profile changing in the country? All those things are also very, very important. Just to give you an example, I met a luggage company, and I was happy how their business was doing post-COVID because everybody was starting to move out of home and traveling a lot. I thought, you're doing brisk business. I complimented him. In reverse, he said, no, Saurabh, this is not about COVID. It is about something else. It is about the airport look of the new generation. Everybody wants to have the color of the suitcase should match their dress. And that means they're buying more luggages, more suitcases. So in fact, if you drop into a mall nowadays, it is very common to have a mirror in a garment store to try out the new garments. But most of the luggage stores these days will have mirrors because the new generation wants to have the great airport look. This means more selling of colorful luggages. So these type of smaller things one should look at, how social behavior is changing, how the world is changing, and the ability to track megatrends should be much better.
Things have changed a lot, right? I mean, in the old days, you could just do an annual report analysis, look at the quarterly results, see what the management is saying, and then that's it. This requires a lot more effort, don't you think? I mean, it requires tracking a lot of things, thinking differently.
So it requires a focused approach.
Yeah.
And one of the things I think required most importantly for investors if they want to do mega trends investing is to filter out the day-to-day noise that they see. Mega trends investing is like truly behaving like an investor, that you're not owning a piece of paper, but you're owning a share of a business. And if you can get around that thought that I'm investor for a longer term and it is the business that will create wealth for me, not this paper that is being traded every day, I think that's the precondition to think and benefit from megatrends investing.
Yeah, I mean, I'm looking at what Saurabh said and I'm thinking that for someone who watches Reels the entire day, he could actually get a stock idea from there itself. Yeah. Amazing. Okay, last question. What's the message for investors here? How should they align their portfolios?
So, as Nimesh highlighted, the portfolio should be aligned to businesses and not noise and day-to-day stock prices. That's the most important aspect if you want to benefit from megatrends. Secondly, it's very important to have a diversified portfolio, not bet on a single megatrend. That's also very, very important because, as I highlighted in the last or second last question, that megatrends can change. And one of the things that Nimesh also highlighted, regulations-driven megatrends change very quickly. So these things have to be known. While the portfolio is a buy, but it's not a hold, it's a watch. So that's the approach one needs to take. Take a longer-term approach, review in between, and keep chugging along.
Valuable advice indeed, folks. And with that is a wrap on this episode of Bajaj Finserv Mutual Fund presents Megatrends Investing. My guests were Nimesh Chandan, CIO, and Sorbh Gupta, Head of Equities from Bajaj Finserv Mutual Fund. Nimesh, Sorbh, thank you so much for sharing your valuable insights with our audience.
Thank you.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.